Okay, welcome to Surviving the Market. This is a program that Dave and I did. Perhaps some of you have seen this before, but we are CPAs. We are accountants, bean counters from Toledo, Ohio, and we work in your industry. We work with a lot of construction contractors in all the different trades and all sorts of different areas. We have developed quite a practice regionally, nationally. We're members of the BDO Seidman Network. Dave and I are here today to talk to you about various things. There's our contact information. There's a little bit about me. This is a little bit about our firm. Again, we've been around for quite a while. We work with contractors. And what we're going to talk to you about today, this is all in the book, and the slides follow exactly what we're talking about. We have 1 hour, so we're going to talk extremely fast. Next slide. We're going to talk today about financial statements. We're going to tell you today what we think you ought to do. Cash management. We're going to talk about cash management, general matters, banking, personal planning. We're going to talk about personal planning. If you haven't done it, it's kind of getting a little late, isn't it? But anyhow, fraud, internal controls. If you cheat, they cheat. We're going to talk about cheating. Cheaters, cheating. Management, leadership, legal, key employees, and taxes. We're going to try to get this in approximately 1 hour. There's probably not going to be a lot of time for questions unless you really have a relevant question. I recommend you throw something at us almost because we're going to be going so fast. But let's get this on the road. If you have any questions during the interim, a break, or a little bit afterwards, we can be here for you. Or all of our contact data is in the book and you can get to us. Dave, you're up.
Okay, what we're going to talk about first is financial statements. As you all know, in today's economic environment, the landscaping as far as business is considered has changed tremendously. The banking environment has changed. The bonding environment has changed. Everything has changed. I've been doing this since 1981, and it's changed tremendously in the last couple of years. First part is financial statements. All you people here in the room are business owners or intimately involved in the company. You all need to understand financial statements. I think that's the premise we have to go on today. That is the key to surviving this market. How do you do that? You must insist that your financial statements are prepared monthly by the 10th of the following month. There should be no excuses for that. That's a must. All accounts must be reconciled to the detailed account information monthly. What do we mean by that? The bank has to be reconciled. Receivables have to be reconciled. WIP has to be reconciled. Every account has to be reconciled, and you guys need to see the detailed information. The financial statement should include month-to-date data and year-to-date information compared to the budgeted data. So you need your month-to-date and you need year-to-date, and you have to compare it to a budget. Now, a lot of you people probably haven't even prepared a budget. That should be the first thing you do when you go back. If you don't have a budget, how do you know how you've done compared to what you think you're going to do? So a budget's extremely necessary. The controller, bookkeeper, accountant, whatever you call that person, should review the financial statements before they release them to the president of the company. So make sure that that is scrubbed very well and you have a clean financial statement on a monthly basis. The controller should also prepare an executive summary. What is that? That's a one-page overview just saying, okay, here are the highlights of the month. Here's the good, here's the bad, here's the positive variances, here's the negative variances, and here's a recommended action plan, or I need you to do an action plan. They have to give you the data so that you can use it as a relevant tool. A lot of times business owners do not use their financial statements as a business tool. It's probably the most important business tool that you guys can use in today's environment. As we said there, the overview must have positive and negative variances with trends and also recommendations and solutions. You, the president of the company, you, the owner of the company, you, the CFO, whatever your title is, must understand the financial statements. One of the things we know with a lot of business owners, you guys have come up through the field, you didn't have a business background, you maybe have not taken accounting classes, but you really need to understand financial statements. That is the heart to your business right now. Your knowledge of the company and the actual financial condition of the company will serve you well in analyzing the operational needs of the company in difficult times. And as we said before, these are very difficult times for a lot of companies. We are seeing bonding companies, we are seeing banks really scrutinize your financial statements now more than ever. So you really need to get really clean financial statements, and you need to understand your financial statements. The controller and the CFO must provide financial leadership. You have to demand that from your accounting people. You should not have accounting people that just give you the information and say, I'm done for the month. You need to demand from them, what does this financial information mean to the company today? Explain it to me. Tell me what this says. What's the good? What's the bad? What's the bonding company going to say about it? What's the bank going to say about it? What are the positives? What are the negatives? You need to know that well in advance. Job profitability. If there is job profitability right now, I'm hearing there's not a whole lot of that out there right now. Cost management, vendor and subcontract cost, construction draws, and general administrative costs must be a principal focus. That last one right there, I see a lot of our construction clients, they really have not taken the time or wanted to cut the overhead because they're always going to wait till next month. You have to go through and say, if I don't make the cuts today, how much lost profits have I got by not cutting the G&A? Because it takes a tremendous amount of new work to overcome the G&A costs that you should have made last month or last quarter. So those are a thing you really need to take a look at. Some of my best contractors have done the tough things and made the cuts, and it's amazing how they said, you wouldn't believe, Dave, how much more we get out of the people that we have, and the more positive effect we have on the people that are working for us, because a lot of the people that were working for us we got rid of really weren't pulling their weight. So most of the time, that was a real positive, not a negative. A lot of people look at that as a negative. I have not seen that for the most part. Yes? Go right ahead.
One thing that we learned as a small
Say it loud.
one thing that we learned as a small company is we tend to want to hang on to these people to the next one, the next one, the next one. And the one thing that we learned is cut them now, cut them all that you're going to cut instead of doing it over time.
I would agree.
And it made a big difference, like you said.
Good. And I would agree with that. One of the things we say is don't cut a person every week. Just get the cuts out of the way and be done with it. And your other people, I think, will step up to the plate.
Right away.
Good. You must meet regularly with the management team and provide proactive solutions. This is one of the things we're in business today. You can't put your head in the sand. You need to meet with your management team and say, okay, I know times are tough, but we're going to get through it. What are the steps you guys think we need to take? So this is a time where there has to be regular meetings and everybody has to be on the same page. The last sentence is one of the strongest sentences we can say. The strongest companies have the strongest financial staff. This is an area where I don't think that you can go for the cheap dollar. I think from a financial staffing department, you need to get very strong controllers, CFOs, bookkeepers, accountants. You can't go for the $10 an hour bookkeeping clerk and think they're going to be a controller. That's a big mistake I've seen a lot of companies make also. This person I think can do a good job. I can get her for $30,000 a year, and you expect that person to be the CFO. That usually is a disaster as far as that goes.
One of the things Dave and I just saw is recently we were in the Bay Area at a company out there, and their controller had been there for 30 years. Their controller said, I've been telling them this forever. They don't listen to anymore. He said, I'm tired of this. I went to the owner and I said, he's tired. Let him go. 30 years, not coming up with suggestions, not coming up with ideas, not coming up with solutions. Friend, not. You need to let that person go on to be with somebody that's not concerned with their future. You need to have exceptional financial advisors on your team, period.
On the other side of that, a lot of times business owners really don't want to hear the bad news. So a lot of times you've set it up where your maybe accounting staff doesn't want to give you the bad news. Accept the bad news and do something with it. Don't have yes men working for you. If they tell you here's what it is and they can prove it to you in black and white, you better do something about that. And I think that's sort of a disconnect sometimes is the accounting people are maybe afraid or intimidated. Some of you guys can be a little intimidating to give the real bad news. I think in today's environment, we got to put the egos to the side and really listen to the data that the financial people are giving you. Cash, use an Impress petty cash system. Maintain a positive cash balance. I mean, it's amazing out in the banking environment today. I've talking to a lot of bankers lately because we've had a lot of meetings with bankers with our contractor clients. I said, when you guys go to your loan committee, what are some of the things that you look at? And they said the biggest things that give a client credibility right now are, do they have a positive cash balance at all times? Are they not overdrawing their account? And are they making their loan payments on time? 3 simple things, but they said you'd be amazed at the number of companies that overdraft their account, that are late on their payments, and do not give us timely financial information. They do a few simple things that gives you a lot of credibility. So make sure that you do that. And pay your taxes on time. That's a big thing. Pay your personal taxes and your payroll taxes. Those are the big 3 with a banker. Pay your taxes on time, do not overdraw your account, make timely loan payments. That gives you credibility going into loan committee. Do you have sufficient cash to fund operations for the next 30, 60, 90 days? This comes into cash flow management and cash flow budgeting. If you don't know this answer, make sure when you go back, you talk to your controller and say, okay, I want to know my cash flow, and we have templates we can send you on how to do cash flow management, and you can extend it out for 30, 60, 90 days. A lot of people say we can't go much beyond 30 days. I say, okay, if you can go to 30 days, I'm okay with that. A lot of people don't even do that. So I don't know how many people here in the room really understand if they have cash flow to operate for the next 30 days. Do you have a cash budget prepared using a standardized form? Everybody should do that. I have a lot of companies that they do a cash flow budget on a weekly basis, especially in today's environment. So I think you guys should do that. It's extremely important. Cash is extremely important nowadays. Like we said, is a cash budget prepared regularly? And do you limit disbursements to the 10th and 20th of the month? I think most of you guys do this other than for payroll. You know, don't pay your payables other than twice a month. Accounts receivables, make sure you schedule those monthly. Are receivables collectible, and what steps are taken to make sure they're collected on a regular basis? As you guys know, we just had a huge developer in Toledo went under. They couldn't collect their receivables. A lot of times that hurts right now. Somebody has to be on top of receivables all the times and try not to get them stretched out. People are trying to stretch you out as you guys are just trying to stretch people out. Draw requests, that's another thing. Make sure they're completed properly and get submitted by the 25th of the month or whatever is required, because I know a lot of the generals, a lot of the customers, they're doing everything they can to bounce back that draw request to you so it can go into the next month. So make sure that you're on top of that and so that you can get your receivables collected in a timely manner. And make sure you establish formal collection policies. A lot of people are afraid to really put the hammer down or to lean jobs. I don't know if you need to do that nowadays. I'd suggest you do, but I know it's a hard thing for people to do. Make sure that you get your formal collection policies in place. Related party transactions. This is one thing that we do want to make sure that we don't have on the balance sheet, because banks and bonding companies do not like to see a related party receivable or payable on the books. If you have a receivable for related parties, they will discount it when they calculate your current ratio and your working capital ratio. So at the end of the year, try to clean those things up. Because what they're saying is they do not believe they're collectible between the companies. If you have a related party receivable, the thought is it's not going to be collected. So clean it up by the end of the year. If you do have a related party receivable, is it formally documented? Are you doing the things that a bank would do to you? Is it supported by a UCC filing? And the last thing is, can the related company pay the balance due the operating company? Most of the time, the bonding company and banks think the answer to that is no. So how do we alleviate that? Get it cleaned up by year end. Because like I said, it will be eliminated when they calculate the ratios for working capital and for your current ratio. And they are looking at those ratios nowadays tremendously. Like let's say you own the building that the company's in an outside LLC. Or you have an equipment leasing company. That's a related party, somebody that's related to you, okay? Related party transactions that we say, are monthly payments being made? That's why let's say you owe rent to your related party. A lot of times you don't even make monthly rent payments. You do it maybe once a year or twice a year when you have the cash flow. You know, you should do it on a regular basis, just like you would do with an arm's length transaction to an outside vendor. Are all transactions at fair market value? All related party transactions should be at fair market value. It's an IRS requirement. And then you have to consider the tax effects between companies. This is one area where if you have related parties, there could be good tax consequences or bad tax consequences, so you need to take a look at that. Fixed assets. When we talk about fixed assets for a construction company, is real property held outside a construction company. We've said this for years. Hopefully none of you guys have your building, which is considered real property, inside the construction company. If you do, get it out before the end of the year. It's not a good thing to do. Also, depreciation methods, book versus tax. For book, you need to use straight line depreciation. For tax purposes, use accelerated depreciation. We have great, tremendous tax laws out there right now. Section 179 depreciation, I just think for 2009, did it go up to $500,000? I believe, Jen. You can buy $500,000 worth of fixed assets and write them off right away. Plus, we have bonus depreciation. Another thing, I was talking to a banker last week, and what they told me was they are amazed at the number of companies who do not have two separate methods of depreciation. They go, a lot of companies use tax depreciation for their internal books. What that does is that really harms the balance sheet. So make sure you straight line depreciation, and what that means is if we have an asset that's